Human capital management. Any company that wants to achieve great success needs to pay close attention to human capital management. The employees of a company are the biggest asset it has, and by keeping the asset strong, the company has the best chance of success. A company that pays little attention to its employee will end up with a team of employees who are unmotivated and unproductive. Human capital management can be the difference between a company with a winning team of employees all pulling together toward a shared goal and a demoralized group who are providing little overall value. It's important that each and every member of the team is considered to as an individual with each with their own set of strengths and weaknesses. Human capital management assumes that any lack of knowledge amongst the employees of a company is purely down to lack of training or teaching rather than looking upon it as a fault of an individual or a team. Human capital management provides a strategic approach to managing staff at a company. It differs from traditional HR practice as it is concerned less with administrative tasks and procedures and focuses more on getting the most out of staff for a happy and productive team. Companies who currently don't have any type of the human capital management program in place should think carefully about implementing one. The employees benefit greatly from human capital management, which in turn means the company benefits greatly too. The approach to managing an organization and organizing the employees through a human capital management program is done in a number of ways. In essence, the approach should provide a fully exclusive strategy from even before a new employee is hired right through to their exit. Another important part of human capital management is succession planning and talent management. Being able to identify key members of staff as possible future manager can make the decision-making process for current senior management more straightforward and allow for greater easier with forward planning. Human capital management defined. Human capital management or HCM is concerned with obtaining, analyzing, and reporting on data that confirms and informs the direction of value-adding people management, strategic investment, and operational decisions at corporate level and at that level of frontline management. The defining characteristics of HCM is this use of metrics to guide an approach to managing people that triggers them an asset and emphasizes that competitive advantages is achieved by strategic investment in those assets through employees engagement and retention, talent management, and learning and development programs. The Accounting for People Task Force Report 2003 stated that HCM involves the systematic analysis, measurement, and evaluation of how people policies and practices create value. The report defined HCM as an approach to people management that treats it as a high level of strategic issue rather than an operational matter to be left to the HR people. The task force expressed the view of HCM that HCM has underexploited as a way of gaining competitive edge. As John Sutherland, task force member and executive chairman of Sweeps Peak commented, an organization's success is the product of its people competence. That link between people and performance should be made visible and available to all stakeholders. Nalbashian EL 2004 emphasizes the measurement aspects of HCM. They define human capital as the stock of accumulated knowledge, skills, experience, creativity, and other relevant workforce attributes, and suggest that human capital management involves putting into place the metrics to measure the value of these attributes and using that knowledge to effectively manage the organization. HCM is defined by Koreans 2005 B as the total development of human potential expressed as organizational value. He believes that HCM is about creating value through people, and that is a people development philosophy. But the only development that means anything is that which is translated into value. Human capital and HR. Human capital is not solely the people in organizations, it is what those people bring and contribute to organizational success. Human capital is the collective value of the capabilities, knowledge, skills, life experience, and motivation of an organizational workforce. Sometimes human capital is called intellectual capital to reflect the thinking, knowledge, creativity, decision making that people in organizations contribute. For example, firms with high intellectual capital may have technical and research employees who create new biomedical devices, formulate products, and can be patented or develop new software for specialized users. All this organizational contribution illustrate the potential value of human capital. A few years ago, a Nobel Prize winning economist Gary Becker expanded the view of human capital by emphasizing the countries managing human capital better are more likely to have better economic results. The importance of human capital in organization can be seen in various ways. One is sheer cost. In some industries, such as the restaurant industry, employees-related expenditure may exceed 60% of the total operating costs. With such significant level comes an increasing need to measure the value of human capital and how it is changing through HR metrics. Human capital management and HRM. In the opinion of Mayo 2001, the essential difference between Hcm and HRM is that the former treats people as assets while the latter treats them as costs. Korean 2005 V believes that in HCM people are valuators, not overheads, while HRM people are treated as significant cost and should be managed accordingly. According to Korean, in HRM, the HR team is seen as a support service to the line. HR is based around the function and the HR team performs a distinct and separate role from other functions. Conversely, HCM is clearly seen and respected as an equal business partner at senior levels and is holistic, organization-wide and system-based, as well as being strategic and concerned with adding value. The claim that in HRM employees are treated as cost is not supported by the description of the concept of HRM produced by American writers such as Beer at 1984. In one of the seminal texts on human resource management, they emphasized the need for a longer-term perspective in managing people and consideration of people as potential assets rather than merely a variable cost. For Brand et al. 1984, in the other seminal text, quite explicitly presented workers as a key resource that managers use to achieve competitive advantage for their companies. Grant 1991 lists the main characteristics of human resource is in his general classification of a firm's potential resources are follows. The training and expertise of employees determines the skills available to the firm. The adaptability of employees determines the strategic flexibility of the firm. The commitment and loyalty of employees determine the firm's ability to maintain competitive advantage. Capelli and Shing propose that the competitive advantages arise from firm-specific valuable resources are difficult to imitate and stretch at the role of human resource policies in the creation of valuable firm-specific skills. Other writers confirmed this view. HRM argument is that people are not seen to be as a cost, but as an asset in which to invest, so adding to their inherent value. Torrington 1989 emphasizes in the original. Of course, all these commentators are writing about HRM as a belief system, not about how it works in practice. The almost universal replacement of the term personal management with HR or HRM doesn't mean that everyone with the job title of HR director or manager is basing their approach on the HRM philosophy. Guest commented in 1991 that HRM was all hype and hope. A survey conducted by Cadwell 2004 provided some support to this view by establishing that the 5 most important HR policy areas identified by respondents were also the 5 in which the least progress had been made. For example, while 89% of respondents said the most important HR policy was managing people as an asset which are fundamental to the competitive advantage of the organization, only 37% stated that they had made any progress in implementing it. However, research conducted by Hulk and Munn 2001 found that there were significant differences between the activities of those described as HR specialists and those described as personal specialists. For example, workplace level strategic plans are more likely to emphasize employees' development in the workplace with an HR specialist rather than a personal specialist, and HR specialists are more likely to be involved in the development or strategic plans than a personal specialist. Both HRM in its proper sense and the HCM as defined as above treats people and assets, although as William Scott Jackson, director of the Center of Applied HR Research of Oxford Brookes University Argus Oracle 2005, Doe can't simply treat people as assets because the that depersonalize them and leads to the danger that they are viewed in purely financial terms, which does little for all important engagement. However, there is more to both HRM and HCM than simply treating people as assets. Each of them also focuses on the importance of adopting an integrated and strategic approach to managing people, which is the concern of all stakeholders in our organization, not just the people management function. So, how does the concept of HCM reinforce or add to the concept of HRM? The answer to the question are that HCM draws attention to the importance of what Koreans 2005 we calls management through measurements, the aim of being establishing a clear line of sight between the HR inventions and organizational success, strengthens the HRM belief that people are assets rather than costs. Focusing attention on the need to basis HRM strategies and processes of the requirement to create value through people and thus further the achievement of organizational goals, reinforces the need to be strategic, emphasizes the role of HR specialists as business partners, provides guidance on what to measure and how to measure, underline the importance of using measurement to prove that superior people management is delivering superior results and indicate the direction in which HR strategy needs to go. The concept of HR complements and strengthens the concept of HRM. It does not replace it. Both HCM and HRM can be regarded as vital components in the process of people management. The choice they make include how much discretionary behavior they are prepared to exercise in carrying out their role. Discretory behavior refers to the discretion of people at work that can exercise about the way they do in their job and the amount and effort, care and innovation and productivity behavior they display. They can also choose whether or not to remain with the organization.